the fact that our manufacturing base has been completely diminished. Pretty much, we need bubbles in order to have an economy. And he anticipated what he thought would be the next bubble, although I think he missed it around food, possibly even oil. But he suggested that green technology had the potential of becoming irrationally exuberant. I wondered if you'd care to comment on that.
That'd be horrible, wouldn't it?
Well, I think there's a difference between an economic cycle and bubbles and super bubbles. I think it's reasonable to expect that any economy cycles. That we have bull and bear markets in financial markets, and that we have expansionary and recessionary, in other words, peaks and valleys in an economic cycle. I think what we've seen with the wildly reckless era of Alan Greenspan, you just have super liquidity. Interest rates coming down to 1%, and you just have an enormous flood of money coming into the system that funds, the collateralized mortgage obligations, that funds the collateralized debt obligations, that funds this $50 trillion make-believe market of swaps and derivatives, and the mortgage obligations and debt obligations that presumably they're insuring. That super liquidity creates a super bubble, and I think it's very artificial. Where an economy, I think, is like a living organism that has its ups and downs, its good days and bad days, its good part of the cycle and its bad part of the cycle, expansion and contraction. I think bubbles and super bubbles are something that are artificial, and I think they're extremely destructive. And I think the super bubbles that we see in oil right now have the potential to be meta-catastrophic.
I think it's a way for the kind of inside traders and the investment companies to squeeze every last dollar out of the economy that they can, because you just see that the differences between the rich and the poor are getting more wide. So you're actually kind of getting all the wealth gathered in that top 1% and even higher now. So I think it's that last-ditch effort to squeeze every little piece out of the economy.
Absolutely. It's a point I made in my article in the current edition of the North Bay Bohemian, which is on prime brokers. I make the point that prime brokers always win, that financial markets are a zero-sum game. For every winner, there's a loser. For every dollar made, somebody loses a dollar, except for the dealer, the croupier, and the casino. And the dealer in this poker game is the prime broker, or the Wall Street banks, or the Merrill Lynch's and UBS's and Bear Stearns and Goldman Sachs of the world, and they will get paid no matter what. Next caller, please.
Hi. A little practical advice for a small investor. My situation is I have a 401k, and a few years ago things were looking kind of shaky to me, so I moved into bonds. And the Dow was around 11,000, and I watched it go up. And then lately, I've been thinking, hey, maybe that was the right move. But the problem is that bonds are dollars. So is it too late? Should I go into a overseas type mutual fund, or what?
The new slogan: "Don't buy American." Wait a minute, that doesn't make sense, does it?
Jay, there's one promise I made myself when I said I'd do this show, and I'm also speaking to you, listener. And that promise was I wouldn't give people investment advice, and I'm gonna resist that temptation, except to say what I do with my own money, and what does the little guy do? I think that we're in for a protracted bear market in the stock market. There are a lot of ways that you can profit on the downside in a bear market, but it's probably not appropriate for a smaller investor. It just involves too much risk, things like leverage, things like going short, things like buying puts or selling calls.
If it's retirement money, there's limitations on your ability to move it around, too.
Exactly. There are limitations in IRAs and in the Roths.
And my advice is just to follow Cheney's money. Again, that's that's the biggest insider you could ever have.
So can a small guy buy Dubai? Or
yeah, sure. You can buy stocks that are, you can buy foreign currency, sure.
Yeah, there are any number of international stock and bond funds out there. I mean, this was one of the things that I was after Tim Knutson, our retirement our retirement board manager. This is one of the things I've been after him about. Why aren't we hedging against the bear market by being in the stocks of commodity producers, in being in commodity-like funds, and I'm not talking futures, in being in baskets of foreign currencies, and in being in international stocks and bonds. This is how you hedge. When I talk about hedging strategies, this is how you hedge against a protracted bear market, and also how you hedge in a stagflation. Now, what would I do with a little bit amount of money now? Like if somebody gave my one of my children, I don't know, $1,000 for high school graduation, I would probably. I think gold is undervalued now relative to other indexes. One of my heroes in precious metals markets is a guy by the name of Rob McEwen, and he has a company called U.S. Gold. The symbol is UXG. Now, I'm not recommending the stock. I'm recommending that you go to his website, his corporate website. Just Google up U.S. Gold and read what Rob McEwen has to say about the value of gold relative to other investments or relative to other indexes like the Dow. By Rob McEwen's calculation, gold